Let's talk about AMC's earnings. Hello and welcome back to another video. I am your host, Young Buffett. If you are new here, scroll down, hit that subscribe button. Now you're not new. Congratulations. I want to talk to you guys about everything that I thought was interesting in the AMC earnings call today. If you missed it, this should be a good recap of everything that you need to know and where the stock price should go, their guidance, their numbers, and pretty much everything you need to know to get started with investing in AMC if you choose to do so. So, CEO Mr. Adam, the silverback ape himself, gave a quick little recap of AMC's overall status. Attendance is up, there's increased ticket prices, food and beverage is being bought like crazy. They are focusing on cost containment. They are pruning marginal theaters. That means theaters that are losing them money, theaters that are not doing so well. They are pruning them, getting rid of them. Q2 financial results were ahead and above expectations, analyst expectations and their own expectations, actually. Q2, they had they had $2 billion in liquidity. We'll talk about that a little bit later. And then AMC's liquidity was at a 100-year high, which is awesome. And their cash burn was less, but they still are burning cash. Again, we'll get into that. And then he wrapped it up by saying, "We crushed it." So let's see how they crushed it. Quick money talk. Revenue was $445 million. They saw a 44.1% increase in per patron spending. They are working with a net loss of $341 million. EBITDA of a $151 million loss. EPS, 71 cents per share loss. Gross cap, $17.9 million. So they overall see strong metrics across the board compared to what analysts and what even they expected. Operating statistics. Everything is improving at AMC. Overall ticket admissions revenue in US in 2021 versus 2019 pre-pandemic. Overall ticket admissions revenue, okay? In Q1 of this year, it was 13% of what it was 2 years ago, pre-pandemic. In Q2, it was 29% of what it was. So far in Q3, they are 45% what it was. Okay, so that's an upward momentum. He kept calling it an upward trend, a trend line. They are still down, but they are trending upwards. So that was kind of some positive guidance that he gave. He said, we're going to keep doing better, and we're trending upwards, which is great. They even reduced their show times, and they really mitigated their possibilities. That's why he then shifted the conversation a little bit to talk about capacity utilization, which is the percentage of seats sold. So you'll see that the cap utilization was 41% of what it was in Q1, 61% in Q2, and 68% in Q3 so far, which is, again, great. They also saw the same positive trends in the EU, but I thought this was interesting. In Q1 2021, they only had 2% of what it was in 2019. The US, it was 13. They had 2 in the EU. In Europe, Q2, 18% of 2019 levels. In Q3, 57%. So they went from 2% to 57%. That's great. That's a lot. The CFO hopped on the call. He talked about global attendance in Q2 was 3 times what it was in Q1. So that's great. 45% below 2019 attendance per showing because of their limitations. It's an illustration of how they were able to manage show times to optimize the efficiency of all of their operations. But then he talked about how comparisons of 2019 and 2021 are not really meaningful, though. So I'm like, great, did we just waste all of our time listening to all of that? But I don't think he meant that the way it kind of came off. I do think those comparisons are important because 2019 would be pre-pandemic, 2021 would be post-ish, still in it, working on it. Path to recovery is what they would call it. So anyways, In 2019, Q2 domestic average ticket price was up 15%. So food and beverage was up 42%. That means they were looking at per person spending $7.91 versus the $5.58 they would be spending in 2019. So they're seeing an increase of prices and an increase of people spending. I also have a note further on down that talks about price resistance. So when we get there, it'll be interesting to compare that to what's going on here. Looking at their balance sheet, we talked about that $2 billion liquidity that they had. That allocation is $1.811 billion in unrestricted cash, which is awesome. But then they have a $212 million revolving credit that they have access to, which is great. Their cash burn is $85 million per month. That is an improvement over Q1, which was $120 million per month. That is a lot of money. Can you imagine spending that much money every single month? That is crazy. I don't know how I would be able to sleep at night, but it's higher box office growth and operating performance. And they, oh man, when you take in debt into consideration in Q2, they're burning $40 million versus the $150 million in Q1 per month. So yeah, the way that they allocate capital, the way that they decide what to spend money on is something that I'm personally really interested in, because it gives you some good guidance on their priorities. And I was happy to hear the CFO say it in order of priority. So they're taking a balanced approach to their capital allocation. First and foremost, they want to ensure that they have liquidity to withstand bumps along the road, ensure they are okay if there's any volatility as the industry recovers. So that's good. They're going to keep cash. They're going to be safe. Number two, they're going to strengthen their balance sheet by reducing their debt. And that was a huge topic that you hear all analysts and anybody who doesn't like AMC talk about, is their debt. So they're going to be focusing on reducing their debt. Then they're going to be investing in businesses to enhance the guest experience. They're going to invest in their business, maybe more theaters, better quality theaters. I don't know. They're going to enhance the guest experience. Then they have partnerships and acquisition opportunities, which is always great, always growth, always good for the long term. Which goes to the next point. They have the long-term future in mind. They are going to be paying cash interest to avoid increasing debt positions. They're going to be paying down their interest and paying down their principal to just get rid of all that debt. They want to reduce debt. It's their second most thing that they want to focus on. Get rid of that debt. They want to continually, actively manage their portfolio of theaters. So they have closed, and he said quietly, I thought that was interesting. They're not announcing this stuff. They have closed 74 marginal or money-losing locations over the past 18 months. So they're taking a look at their portfolio of theaters and saying, this one sucks, this one sucks, this one sucks, and they're getting rid of those and focusing and reallocating their capital to things that are actually making them money, which is fantastic. They're focusing on attractive and money-making locations. Their cash rent was $55 million more than they paid. It was $55 million more because they paid their rent deferral. So a lot of their landlords have deferred their payments because obviously the movie theater industry got destroyed. So they're paying back those debts. Goes back to their debt repayment. Their debt load, they got a little specific about their debt here. So they have a laddered debt. Their debt will not mature until 2023. Most maturity will not come before 2026. So it gives them time to deleverage the company a little bit and strengthen their balance sheet and refinance their liabilities as COVID times get better. People's assumptions. So people would assume, the CEO addressed this. He said people were certain that AMC would file for bankruptcy. People thought the recovery would be slower or lower. People assumed that there was a demise of the movie theater industry. So people said that streaming will beat them. Now, I thought this was interesting because he pointed back in history. He said people thought radio would beat theater. People thought TV VCR, DVD, etc. All of these new inventions, all of these new fads, all of these new things that are coming into the industry would kill the movie theater. But then he went on and pointed that Americans went to the movie theater 1 billion times in 2019. Global box office was a record high of $43 billion. So the movie theater industry is not going anywhere. I personally think that the movie theater industry will feel some sort of pressure as streaming becomes more and more and more popular. Streaming already destroyed Blockbuster. So you have to keep up with the times. Theaters have a unique allure to them. So I do not think movie theaters are going to go out of business. I definitely don't think AMC will go out of business. So the CEO had 10 announcements that he was super excited. It was really cute. He was like, I have 10 announcements. I can't wait to tell you guys. And then he passed the phone to the CFO, and the CFO said his stuff. And then he came back on and he was super excited to announce this stuff. So let's dive into this. 2 leases added to the AMC theaters. He was super proud of the LA's highest grossing, the Grove and the Americana, opening later this month. So that's awesome. 10 leases, and then he came out with like a surprise, and he said they have 6 new theater pickups: Chicago, Atlanta, LA. 8 out of 10 of them were former ArcLight. 12 new build theaters across the globe. They built 2 in LA that are the top half of the 99 percentile of the US cinemas in the first few months of their operations. They know how to make movie theaters. They're really good. He talked about investor ideas. He said, yeah, we heard you guys want to do concert movies, sporting events, esports, and gaming events. They have implemented some of these ideas already, and they're looking into all of them. UFC matchups, concert movies later this month. They're doing more. I think he said with like Chance the Rapper or something. Sports leagues to see if they can get the rights to show sporting events, different gaming opportunities. I didn't know this, but the Epic Games is on their board of directors. So they are working with Epic Games. They are talking to GameStop to see if GameStop is interested in any partnership stuff. So we'll see where that all goes. He talked about cryptocurrency. He's on the board of directors for Arquit. I forgot what he said, but it's a SPAC. And they're working on blockchain technology, so he's learned a lot. By the end of the year, they will have the IoT systems in place to accept Bitcoin in the United States. So that's really exciting for Bitcoin, and that's really exciting to see now how AMC will handle those Bitcoins. I think people might sleep on this a little bit, but what if they start accumulating so much Bitcoin that the price of AMC starts moving with the price of Bitcoin? We'll see. Payment methods: Apple Pay and Google Pay. I totally would assume they would already have that, but that's great. So they're going to implement that. AMC Investor Connect. So 300,000 people have joined already. It pretty much gives you special benefits if you're a shareholder. It also improves communication with people who own AMC, special screenings and other benefits and stuff. And he talked about his Twitter, which was funny. He's like, I just started tweeting again. He has a lot of Twitter followers. He was excited about it. Overall, 72 million impressions. Missing a 0. 72 million impressions on his tweets, so he's super proud about that. He reads everything. He cares. He looks at his DMs. He looks at his messages and his feed and stuff. It's just cool. He's an active and involved CEO. That's pretty much the point of that. Price per tickets, he saw no price resistance. So they very quietly imposed a 5% admission increase, which on average is about 50 cents. I don't really care, but imagine a company increasing something by 5%. They're probably going to make a lot of money from that. So that's something I'm going to be looking at in Q3 and Q4 to see how that comes to fruition. AMC partnerships. This is very important for future guidance. Check this out. They are working on a universal partnership, and they have come to a formal agreement with Warner Brothers to show their movies in 2022, 45 days prior to home releases. What does that do? That battles against streaming. So they really want to lock this in with like every studio to build those agreements and those windows so they can have that competitive advantage. That'll be awesome. Then finally, I thought this was awesome. Company insiders should be equally as invested in the company as the shareholders themselves. They should be economically motivated to keep AMC afloat. This is just really cool. Ownership stake is important, whether it's owned or granted shares. Insiders have financial interests that are in line with shareholders. They have a 1-year lockup for shares that are granted anyways, but the CEO is now required, or he's proposing this, I think, but it'll probably pass. The CEO will be required to hold at least equal to 8 years of his salary in shares. That's about $12 million in AMC. The CFO is required to hold 6 years. The executive VPs are required to hold 4. The senior VPs are required to hold 2. He has not sold in 5 years, even though it's 3/5 of his salary. Then he talked about how in September his birthday's coming up and he's getting old. And he said he kind of wants to diversify his portfolio to be responsible, right? A lot of his net worth is in AMC shares. So what he's doing is he's being extremely transparent, which is awesome. He didn't have to say this, but he likes being transparent and he wants to be very clear that he is not selling AMC shares. He is initiating a 10b-51 plan, which is a CEO handing off the trading decisions to a third-party institution. He passes it all off to a third-party bank at the end of the year. Small percentage of his shares can be sold in any month. He will still own millions of shares, but he will have to diversify a little bit because, again, he's getting old. He wants to be financially secure, but in no means did he say that he's selling because he doesn't believe in AMC. He very much does. And he has to hold at least 12 million in AMC anyways. Then he jumped into Q&A. He answered Timothy's good old dividend question. They were paying dividends, but they had to stop. Some of their debt instruments that they have force him into a commitment where AMC can't pay a dividend. So they might look into it next year as those commitments go away. GameStop partnerships, they're willing. They've reached out to GameStop, so they'll see what to do there. I don't know if anything will happen from there. It's more of a meme, in my opinion. Would AMC consider drive-in theaters? He actually talked about how it's a bad economic idea. Parking lots, a lot of asphalt, a lot of upkeep. Viewing screens aren't that great. The people are too far. It's seasonal. People in colder locations don't like it. In summer, it doesn't get dark soon enough. So I guess that makes sense. Then you talk about safe and clean protocols. They've partnered with Harvard's health organization and Clorox. So they're very clean. I think he also said not one COVID case because of AMC. So that's cool. And then reduce the company debt. No share offerings. So they're not going to sell shares they're not going to dump their shares on us to pay off their debt, which is great. Overall, AMC did really well today. Up 3.36%, and after hours it went up even more so. I'm just very curious to see how this digests. It's going to be important to see the post-earnings digestion. It's going to be important to see if this will continue to rise. I know the $40 level has been a resistance in the past. Anything below 30 is a little painful for a lot of people. So I'm not sure. I am not sure. I guess we're going to have to wait and see how it all digests. Don't forget to hit that subscribe button. We cover this stuff almost every single day. If you have any questions, let me know in the comments below. And with that, I will catch you guys on the next video.